Hey everyone, welcome back to Corporate Decoder, where we unravel the mysteries of corporate filings. Today, we're diving into the Global Macro Portfolio Report, and let me tell you, it's not as simple as it sounds. It's like trying to predict the weather 6 months from now, but with money, which, as you can imagine, it can lead to stormy days or surprise rainbows depending how the market behaves. Before we start, if you are interested in a community that decodes the Wall Street maze, welcome aboard and make sure you are subscribed. We also have a Discord community linked in the description below. Come meet like-minded people. This isn't your average neighborhood portfolio. We're talking about a massive collection of investments, over $2 billion in assets, that tries to make money by betting on how the world economy will move. Think interest rates, currencies, and government bonds across the globe. It's a high-stakes game with lots of moving pieces all connected. The fund's expense ratio, what it costs to manage your money, is about 1.36%. On a hypothetical $10,000 investment, you'd pay $69 in expenses over 6 months annualized. This is important because these little percentages eat into your returns. The fund's portfolio turnover rate is 86%. This means the fund is actively buying and selling investments, and that is a lot. It isn't a bad thing, it means they are active. Where did this fund actually invest its money? A big chunk, 46.8%, is in sovereign government bonds. Think lending money to national governments. Another 38.3% is in short-term investments, kinds of like money in their pockets, ready to act, or defensive. Smaller positions are in foreign corporate bonds, 4.46%, and collateralized mortgage obligation, 1.44%. Here's where it gets interesting. Currency exposure. The fund isn't just betting on bonds and stocks, they're also betting on currencies. They're holding significant long positions in Uzbekistan, Egypt, India, Serbia, and those mean they're expecting those currencies to raise vs currencies they are shorting, like the euro and the Chinese yuan. Currency exchange is a different kind of risk. Let's dive deeper into specific investments. I see big positions in collateralized mortgage obligations. These are mortgage-backed securities, securities comprised of home loans. Also positions on federal home loan mortgage and federal national mortgage. Now, here comes the part from every of our videos that tells you something isn't right. Even some of these debt holdings are from troubled entities like Sunak China Holdings and Shimao Group, and they are not paying at the moment. Looking at sovereign government bonds, there seemed to be some exposure to Brazil also holding the country title. Going down the list looking for a trend, there are a lot of bonds from Ghana. It seems as if they are betting on this nation and its currencies. Also, a lot of bonds are PIK. Also, take a look. The amount in Honduras may suggest that there is a level of confidence around a country with questionable levels. Taking a look at the chart, there is high amounts from the Republic of Ethiopia bonds, an illiquid nation, so it could be an area that requires attention. The fund has an investment in the Uzbekistan's Industrial and Construction Bank. We also see a tiny fraction, close to 0%, on Zambia bonds. There is some short selling going on too. For example, Seinai as a broad duality high yield corporate bond ETF. They seem to be using a couple of counterparties, including entities such as Deutsche Bank, Goldman Sachs International, and JP Morgan Chase. It seems like they lost money overall. What does all of this mean? This fund is making big bets on global interest rates, currencies, and emerging markets. They're actively trading and have massive amounts in the market. When it comes to which securities to pick, this fund and other like it will invest specifically on companies with low fair value and that it could be their edge from the investment team. This strategy is not for the faint-hearted. It involves complex instruments and significant risks, especially in emerging markets, which is why they have been losing money. So what's the takeaway? With a large amount of assets being held, it is a good fund in theory. The macro of the name implies global, large, and complex bets. That means high risk and high reward. For conservative investors, this is not the fund to go on. Alright, that's our breakdown of the Global Macro Portfolios Report. What do you think about their bets and what they signal for the world economy? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Your insights could spark amazing conversations. Thanks for watching. See you next time.